Welcome back to Market Day Report. I'm Tony St. James. Well, it's kind of an interesting day. It's a two-day trading week after a two-day trading week, thanks to a federal holiday right in the middle. So how will markets react with just 2 days to trade before the weekend? Well, let's start with corn, which has been under pressure and remains under pressure overnight, down 4 on the front month July at 446. While December, the new crop at 463, it's off 4 3/4 cents and trading a few ticks off the day's low. For soybeans, we've been lower as well. That July contract at 1168 1/4, it's down 5 3/4, and the November at 1125 1/4. It's a quarter, just one tick, quarter penny off the day's low, down 6 3/4 cents. Wheat market in Chicago, 574 3/4 on the July. That's down 7 1/4. September trades 592 1/4, off 6 3/4. You know, the wheat market has been really hit year over year. It's one of the worst performers of all. Hard red is in there as well, down 7 on the July. 593 3/4, tick off the day's low. And we swing over to spring wheat Minneapolis. It's also following that same trend. July at 623 1/4, down 9 1/2. September at 633. It's 7 1/4 cents lower. And finally over to New York. Cotton futures trading somewhere around 30 cents off of their highs of the past 18 months. We hit $1 at one point, but now 71.38 on the lightly trading July. That's up 35. The most active is the new crop, December at 73.11, up 35. Let's talk a little more about this. Brian Hoops is with Midwest Marketing and joins us. Hey, Brian, welcome back.
Hey, good morning, Tony. Always good to talk with you. How are you doing this morning?
Never better. You know, the wheat market is one of those that's really underperformed throughout the year. And I jotted this down 22% year over year. Man, what's hitting us?
You know, we did have a real good rally. Funds covered all those short positions and got back to about even. And now they've started to reestablish those shorts. And there was very little fundamental reason to see that prices move to where they did. So hopefully producers were able to take advantage of that and do a lot of marketing, a lot of hedging, lay some of that risk off because those prices were not going to be able to be maintained. We rallied on concerns about the Russian wheat crop that maybe we would be able to export some of our own wheat. And that's just not going to be the case. We're, maybe 5th, 6th, 7th place in the world pecking order from places of other countries to buy their wheat from. And we're just not price competitive. We weren't price competitive in the $5 range. We certainly weren't going to be at $7. And now we're back down into those $5 areas and still trying to find a harvest type low. And usually those don't occur until half of the crop or so has been harvested. And so far, yields are coming in better than expected in the hard red wheat belt. The harvest is faster than normal. So we're seeing a very rapid pace as far as our harvest goes. And what that also means is that double crop soybeans in my area, such as Missouri and these other surrounding areas, are probably going to be planted sooner, and that ups the yield potential for soybeans as well. And you've seen the soybean market also kind of collapse. We've fallen to really key technical support in the overnight markets.
You know, you mentioned whether or not we're really competitive on a global scale. What about like corn? Are we competitive globally there?
Well, we have been, yes, and we've seen a pretty good uptick in the corn market. So as far as exports go, our inspections have been running strong. I was really surprised in the last supply and demand report, the USDA did not increase our export profile for the old crop marketing year because our exports have been running so good. What we're looking forward to here now is the safrinha corn crop is being harvested. That second corn harvest, it's only about 9% done. By the end of this week, we could be, 16, 17% done. But as that crop gets harvested, that goes on to the world marketplace and competes with us, and that means we will be less competitive in the month of July and August and into the end of the marketing year. So we have been very good as far as corn exports, but looking forward, I don't think we will be over the next several months, and that's kind of a detriment to this corn market, as we won't see a real strong uptick in these exports.
Hey, Brian, hang around. We want to talk about livestock and cattle in particular. Can we remain competitive there? We'll talk about that after this. Welcome back to Market Day Report. Okay, will we be competitive in this two-day trading week when it comes to livestock? Let's start with the cattle market. We haven't opened yet, but live cattle trading 186.67 off 37.5. Before our holiday, and the August contract 182.10 was off 70 for the feeders. We also saw some pressure there. August contract 259.95 down to $1.37 has been the most active and was near the lows of the day on Tuesday. And over for hogs, deferreds were higher, but both July and August in the red. That August at 91.57 was off 30. Let's bring back in Brian Hoops with Midwest Marketing. And Brian, when we look at the cattle market, I guess one of the things traders will be watching is that cattle on feed report tomorrow, right?
Yes, you're absolutely correct. So that's a monthly report, comes out 2 o'clock Central Time. Trade estimates look to be somewhat friendly on feed supplies, about 99%, placements at 98.5%, marketing's around at 99 to 100%. So overall, it looks to be a friendly report. I think it gives us, real good support underneath this market. We're still looking for that cash trade to develop. We haven't seen anything so far this week, but the boxes have stayed steady when a lot of people have been talking about a top in the boxes, simply because our buying interest for Father's Day, 4th of July holiday should be coming to an end. So we think that maybe these boxes will start to top out, and at some point they probably will. But for now, for this week, it looks like we're going to have probably at least steady to higher cash trade despite the bigger show list numbers, as those packer margins have stayed in the black, about $27 ahead.
We did see some, I guess, a report of a sell in Oklahoma on Monday at 188, but still, like you said, not enough yet to really get a good idea. 1 to 2 higher last week in the South and the North. Can the South kind of catch up with the North?
I don't think so. I think the numbers are tight enough in the North that the Southern trade's probably going to continued trade discount. We had heard some reports from packers actually taking cattle into the northern areas just to help out the kills. So yeah, I don't think they're going to catch up as far as the price goes, but over time it probably will. The numbers will probably even out. But it does look like, as you mentioned, some 188 in the South. We're going to try and replicate that or even move higher into this week and into next week, because next week's going to be very hot across those plains. And while that helps speed along our winter wheat harvest, it's a safety concern, higher death loss concern for the cattle, and we'd like to see those cattle get moved before it gets super hot.
Brian, thanks for spending part of your morning with us. We'll look to visit with you again down the road.
Have a good day, Tony. Thank you.
Again, Brian Hoops with Midwest Marketing as we prepare to really open up the livestock markets today.
It's going to be an interesting day. By the way, Tony, how great to have you here in studio sitting at this desk. I feel, though, like you've always been here, because we're used to seeing you out in the field in Texas as our analyst, or up on the Hill covering legislation. So the farm broadcasting, I mean, this is something you've done your entire career.
Well, actually, I didn't grow up in ag, but I got here as fast as I could.
Sometimes I use that as well. So you've been doing this for quite some time, and being here at the desk, have you done this before in our studios?
I sat in one time before.
Yeah, well, it's great to have you here. And boy, what a day, too, to jump in on the desk. 2 days with that day off. Is it kind of making the markets kind of going to be interesting as we move forward through the day?
I think so. There's just so much uncertainty at this point with the markets, and a lot of that is going to hinge upon what happens with our economy. Some of the jobless claims numbers today are higher. The housing starts are lower. it's not really a very optimistic picture at this point.
Yeah, well, I'm glad you're here to cover it. What a pleasure. Tony St. James, thank you for being here.